2 weeks ago, I increased this Terra DeFi portfolio to $2,000. Today, let's take a look at the position, see the assets, the liabilities, and find out what yield this strategy is generating. On Creda, we can see that the value of my supplied assets is $1,622 and the debt value is $529, which gives a net worth of $1,093, and the health factor is 2.21. Personally, I like to think in terms of LTV, so loan to value is 32.6%. So the total portfolio is, or I've put in $2,000, but there's only $1,000 here, so the rest of it is over on Terra Liquidity Alliance, and I've deposited $755 worth of LP. And we can see here that over 2 weeks, the amount of yield that these LPs have generated is $19.15. Let's take a look at this in a little bit more detail. Thinking back to the position on February the 16th, which was exactly 2 weeks ago today, my Luna debt at that time was $6,363. We can see today that that has increased to $6,426. There's also a tiny bit of wrapped staked ETH interest accrued as well. So the total borrow cost over this 2 week period has been $4.08. That's the debt in dollar terms. Then as far as the yield that I've generated, that is at the moment in dollar terms $19.15. So on a $2,000 portfolio investment, that works out at about 0.75%. And if I was to look at that on an annualized basis, that would be just under 20% APR. The next thing I want to do is now claim this yield, and I'm going to deposit it into an LP that makes it really easy to track what's going on. And this will make future yield updates much easier to see what's happening. So the rewards are claimed as AMP Luna, and what I'm going to do is join an LP, or put the rewards into an LP. And the one I'm going to join is this USDC USDT LP. And I'm going to zap tokens in. So what that means is I can just zap in the rewards that I've claimed straight into this LP. And I do want to auto compound. The reason I want to auto compound is because I'm then going to use this LP on the Creda money market. Now, it's not a huge LP position, but now that I've got this $18.85 position, I can go over to Creda, and I might need to refresh. Yeah, if I just refresh the page, we should notice that I'm going to have some of this LP that I can deposit. Yep, and we can see it there. So I'm just going to supply this. So this is also going to help my health factor for, well, minimally, I'm going to benefit my health factor. The strategy here is going to be then, for every time I claim yield, maybe every 2 weeks or so, I'm going to add it to this LP, and then over the course of a few months, maybe even longer, we'll be able to see how much yield I've generated over a 3-month period, 6-month period, or whatever period we're looking at. I'm quite happy with the way this portfolio is going. The net worth is actually less at the moment than the initial $2,000 that I've put in, but that's not too concerning because that's related to the declining price of wrapped Bitcoin. But as this portfolio progresses, I'm going to keep adding to the wrapped Bitcoin in the portfolio or on Creda. And then hopefully long term, I'll see an increase, or we'll see an increase in the Bitcoin price, and all will be well for this portfolio. And in terms of the yield, just below 20% APY is also, I think, a decent return. As far as risk is concerned, I'm keeping the health factor of the account, I think, high. The LTV is round about 33%, which I think is a safe LTV to be running. The main risk, I think, is less the LTV risk and more possible smart contract risk of playing the game of DeFi. But yeah, these are all risks I'm willing to take, so we'll see how things progress.